Are you a veteran looking to do a VA home loan and want to know what the VA home loan limits are? Well, stick around and we're going to go over loan limits, what you need to qualify, what the VA loan actually is, and how much you can buy with a VA loan. So stick around and let's get to it right now. All right, one of the first things I want to start off with, if you're a veteran like me, I would love to thank you for your service. I love working with veterans. I think we have a special language that only we understand. So, it's really close to my heart, helping out veterans. So if you need anything, reach out to me anytime. I'm here for you. Okay, first things first, what is a VA loan? A VA loan is a loan that is backed by the Veterans Administration. So it's not its own specific loan. It's a loan that you would get from a bank or like a credit union or something, and the VA basically backs the loan for you. So it gives you the ability to have more favorable terms. Now, some of those terms are, and this is why, people love VA loans, 0 down, 0 out of pocket. There are no loan limits. Back before 2020, there were, and it was based on the county you live in. But now, since 2020, they've lifted the loan limit, so you can buy, as long as you qualify for the home, you can buy any home you want to buy. The other benefit to having a VA loan is there's no mortgage insurance. You can buy up to a 4-unit. So if you find a 4-unit, like an apartment complex or even a duplex, as long as you occupy one of the units, you can qualify for it. So let's say there's a $2 million fourplex that you're looking to buy. If you have enough rent plus your unit and what you're going to pay in to qualify for that $2 million in income, then you'll qualify for the loan. Since they got rid of the VA loan limits, they have raised the funding fee to 2.3% of the loan. If you're disabled, part or all of that can be waived, and that 2.3% can actually be rolled into the loan as well. So you don't have to come out of pocket, all that money up front, depending on how much you're buying. Real quick, if this is your first time to the channel, subscribe and tap the notification bell so that you'll be the first to know about the real estate market in Southern California. My name is Steve Batiste, and I'm the broker owner of Next Home West Realty, and we get calls, emails, and texts every single day from people just like you looking to make their move into Southern California. So if that's you, don't be shy. Give me a call, send me a text, or shoot me an email. I'd love to help you make a smooth transition into the area. There are VA loan limits if you have defaulted on a loan in the past, a VA loan in the past, or you have a VA loan currently. So you can buy an additional home with your VA loan, but on the second home, there's going to be a limit imposed on that home. If you're a veteran, you're going to buy a home using your VA loan, you're going to want to make sure that you get a lender that understands VA loans. Not all of them do. You're also going to want to find an agent that understands VA loans and can articulate what VA loans are to other agents. I've found in a lot of areas, real estate agents don't really understand how VA loans work. They think that, it's going to cost their seller more money, or, it's a bad loan, and that's not the case. The only time you're really going to run into an issue is if you have offered, like, let's say $900,000 on a home and the appraisal comes back at $850,000. Well, there's a $50,000 gap there. So the VA is only going to authorize up to $850,000. So then you're going to have to probably come up with the difference, or you might be able to get the seller to go down $50,000, but there's an appraisal gap there. So other than that, if the home appraises at $900,000 or $1.5 million, whatever it appraises at, you're good to go. So some of the requirements you're going to need a certificate of eligibility. If you've had 90 days of consecutive active duty service, or if you're in the reserves and you've had 6 years of reserves and or 90 days of active service, then you'll qualify. The other way you qualify is if you're a surviving spouse of a veteran who passed away while on active duty, or as a result of like injuries from his active duty service, then you could qualify. You'll also need to have at least a 580 credit score. Now, there are programs and there are exceptions to that. One of the things that you might want to look at if you're in California, and a lot of other states have these same programs, is the CalVet program, which will allow you to go, lower than that. They don't really base it strictly off of, credit score and your debt to income ratio, which with a VA loan, again, I'm saying this, but they would like you to be at 41% or lower on your debt to income ratio. You can go above that based on having like residual income and where that money is coming from, but as a general rule, you're going to want to stay around 41% debt to income ratio. There are some cons of using a VA loan, if you could call it that. One of the cons is it has to be a primary residence. So if you're looking for an investment home, not going to work for you. The VA requires you to live in the home for at least 6 months. You can buy a up to 4-unit apartment complex, but you have to live in one of the units for at least 6 months. And yes, they do come and check from time to time. One of the other cons is the VA appraisers are a little tougher for the appraisal. So give you an example. If I'm looking at a home and the fence is looks like it might fall over or leaning over, or the flooring's not in, or one of the rooms is unfinished, VA is not going to approve that. They're going to want that house to be habitable. They're going to want to make sure that it's safe for the veteran. So the VA appraisers are going to come in and they're going to go over that home. I'm not going to say with a fine-tooth comb, but pretty close to it. They're going to, if there's anything wrong with the house, if there's something that you see, with your bare eyes, they're going to see it, and it could cause them to not approve for a VA loan. The other thing is that if you're looking at buying a condo, condos have to be VA approved. If it's not, talk to your lender, see if they can get it approved. I've had condos get approved for VA and FHA that weren't approved by the lenders that I use. So keep that in mind. It makes it a little bit more of a hurdle. So when you're dealing with a real estate agent, one of the things that we check before we show condos to VA buyers, if your agent's aware of it, is they want to make sure that they can get a VA loan on that condo. Sometimes the listing agent will put it in the MLS so that we can see it. Sometimes they don't. So you're going to want to make sure before you waste your time going to look at those if they're not VA approved. The other thing is that you're going to need at least 2 years of income, like provable, showable income, 2 years of tax returns in the same industry. So if you're, a carpenter, for the last 10 years and all of a sudden you switched and now you're selling cars, not going to work. You have to have 2 years of selling cars now and 2 years of income selling cars before the VA will approve you. And that pretty much wraps it up. If you have any questions, go ahead and put them in the comments below. If you need help, you need a lender, you need a realtor in your area, give me a call, shoot me a text, send me an email, and I would love to help you out.